Well, we've got a mixed bag. It's the summertime, so markets are pretty thin at the moment. So if anything does come out that's pertinent, it can sort of move a market pretty quickly that has been slow for the whole day. But we've got a couple of things that are sort of looming on the horizon. We've got some figures out, particularly this week, which are pretty important, and we've got the obviously the Ukraine crisis as well as the sort of looming impending end of the tapering from the US. So all of these sort of together are having various effects on the market and moving it in their own way. Steve, what do you think about some of these factors that are moving the market at the moment?
Well, at the moment, I think the tapering problem is we may be slightly earlier than need worry about it. But obviously, for me personally, I think what we're going to see is as we get closer to the end of tapering, I think we may see equity markets continue to fall and maybe correct something around 20%. Maybe that's my expectations for it. I don't know. There's mixed feelings at the moment as with the with tapering, and I don't think we're going to be that much when we get on top of the number. I don't think we're going to see that much reaction to it. I think we're all making a bit too much fuss over the end of tapering. What I do see at the moment is a general dollar turnaround. Yeah, I think we're seeing that in most of the currency markets at the moment, I think what will happen is we'll see the dollar generally appreciate across most of the European currencies and probably the Asian currencies as well. Thrown in that the Ukraine crisis, what's going on in Gaza, I do think we're generally we're news dependent, and I don't know. Like you say, we're having these quiet periods where we'll sit 4, 5, 6 hours during the day, not doing very much at all, and then we get a headline come out or someone mentions one of the crises going on, and that's when we start to move. And sometimes at the moment it doesn't actually move in the direction you would expect.
Yeah. For example, we had ADP figures out today, which didn't really move the market too much, and then GDP figures came out, and a revision for last month's GDP figures as well, and the market jumped around and dollar strengthened all of a sudden.
Yeah, I think the ADP number, whenever it comes out, people seem to take a lot of notice of it, and it's generally wrong. I think it's an awful indicator, and it still amazes me that people do take notice of it, because when their payroll's out on Friday, I'm not saying it will be misleading, but I'd say probably 7 times out of 10 the ADP number is not a good barometer of payrolls. And like I say, today they came out slightly worse than expected, the ADP. We didn't really have much of a move, but then obviously we got the 4% GDP number come out, which then did cause the dollar to jump. And we're getting these. Well, the dollar is looking quite firm at the moment. Dollar yen is appreciating after, looking like it was going to be sold through 100 again.
Yeah.
It's got quite a steady bid on it at the moment, as has most of the dollar across the board. But yeah, we're data dependent. I'm a dollar fan. That's the way I'm looking at the moment, and using maybe the news and the movements we get off the back of that to maybe look to buy dollars on dips at the moment.
Yeah, no, definitely. I think there is a sort of perfect storm gathering, which will help give the dollar even more strength, sort of going forward. And we're definitely picking and choosing, and very news dependent, news junkies perhaps.
Yeah, maybe, but like I say, we that's the way it is. It's a summer market. There's not too much more to go for. Trade the charts, look at the levels, and buy the right levels in the dollar, rather than just getting where you think, oh, hold on, it's going.
Yeah.
Let's get long. but just be patient, wait for your levels, and don't get stopped out where you want to be buying it. It's as simple as that.
There you have it.
With the impending sanctions that are supposedly going to be happening pretty shortly, if they do go ahead, we've got France at the moment saying that they're building a battleship for Russia, and BP don't want to be losing any profits. So there's obviously a bit of infighting at the moment as to what sanction to be put in place by who. There does seem to be a gathering momentum though that is going to be sort of pretty much all of Europe and the US, and a worldwide sanction over Russia, which is obviously going to affect the Russian ruble and any kind of currency that's tied to it. One being the Turkish lira, which we're seeing at the moment, a lot of correlation between that pair, which is quite strange. We had the initial move for the Russian ruble was to strengthen, but we are now seeing a complete turnaround, and rightly so, I would imagine. So we're seeing the Russian ruble weaken, and I can't see anyone at the moment jumping into investments inside Russia because of the cut-off, if you like.
Absolutely. I think as well that the effect, like Steve was saying, in the currency markets perhaps wasn't seen as immediately as we would have thought. In fact, that the ruble strengthened beforehand, but I think that this is going to have more of an impact politically on Russians and on companies that are trying to do business, with Russian companies. But I think that the effect on the currencies, except for the ones that are directly linked to the ruble, would be muted on that.
As I mentioned before, we're obviously seeing the euro and the euro Turkish and dollar Turkish appreciating, and it's a lot of Turkish selling at the moment, a lot of ruble selling. What we are seeing as well, we're seeing a lot of yen Turkish and stuff like that. Is along with the general dollar buy feel at the moment, we're gaining momentum towards the upside for the dollar. Canadian dollar, which generally in these situations the Canadian would strengthen, obviously through safe haven status and things like that, but we have actually broken out to the top side of dollar Canadian, come through I think the 200-day moving average, and are currently looking extremely firm, and I personally think we're going to see the Canadian dollar weaken more, and the yen, and so I'm looking at maybe 112 for the Canadian against the US, and a dollar yen looks at the moment going back to its old level of sort of 103.60, that sort of area.
Yeah.
But as for the ruble and the Turkish, the chart suggests the sky's the limit, and I wouldn't like to put numbers on those.
Absolutely, I think dollar yen would be my pick. It's got a bit of momentum in there, but like we were saying previously, we would have thought that it was overbought, and perhaps it was time for a slight correction on that. But I guess time will tell. We've got the non-farms out at the end of the week, and that I think really will seal the fate of and have a big impact on the dollar yen cross in particular. And if those figures are unfavourable, then we might see some knock-on effects on the CAD as well.
Maybe. It's like I say, just purely on technical trading at the moment. The dollar Canadian, dollar yen certainly looks strong, and I would imagine they're going to continue in the same vein.